Daniela, away from the politics, I mean, you can't get away from the politics with any UK asset, I suppose, but away from the day-to-day politics, how do you plot a course for gilts, for example? Do you focus on demand that's going to come from pension funds and the fact that they need this long-term investment, or do you focus on this day-to-day politics?
It's hard to completely ignore it as much as we would like to, and it's making the call and duration very, very difficult. And I think, but to look through the noise, the big things to focus on is, what's the Bank of England's reaction function, and also don't underestimate what's going on in global bond markets as well, because those are going to be the key drivers, both in terms of where the outright level of gilt yields go after we get some sort of Brexit clarity, and what happens to the shape of the curve.
Yeah. Do both of those point to lower yields for the UK, for gilts?
I think without a sustained rise in global bond yields, I think it's very difficult to see gilt yields rising, even if we see a long extension period and that brings some relief. I think that it's very, very difficult for the Bank of England to be considering to raise rates, even in that sort of scenario. Growth has obviously come under pressure in the UK. Inflation is already below target and is going to fall further. And now that global central banks are shifting to an easier monetary policy stance, those factors all make it very, very difficult for the Bank of England to be raising rates later this year, even if there is a deal or even if there is a long extension.
OK, let me ask you about the underlying performance of the UK economy, and I've got a chart that takes a sort of sideways look at that. This is the two stories that kind of exist in the UK housing market at the moment. On the one hand, we've got the rise and the fall of the London market in blue, and in the yellow, we've got the one particular region that's been picked here by the people who did the research. This is Yorkshire and Humber, just making the point that whilst London has risen and fallen, other parts of the country have been quite stable. Does this tell us something important about the resilience of the UK economy in the face of all of this Brexit uncertainty?
I think, there are two-speed metrics going on in the housing market. But if you look at the picture as a whole, certainly when you view that combined with other indicators of consumer confidence, which have been quite weak, the story is quite difficult in terms of the outlook for consumer spending. And I think, one of the things that the Bank of England is going to be paying particular attention to, if you do get some clarity, is just how much investment and consumption responds to any improvement in the political outlook. And the housing market potentially as a whole has the the potential to be a continued drag on consumption. And so we may not see the sort of bounce back in activity that perhaps we're hoping for.
How vulnerable are gilt markets typically to the political day-to-day workings in Westminster, Daniela? Because if we do see a change in Prime Minister, if we do see a general election, if we do see a referendum, do we typically see gilt markets move around these stories substantially, or just very much at the margin?
It's been very interesting over the last few months. I think as a whole, the foreign exchange market has been much more volatile in terms of...
That's been the shock absorber, hasn't it?
Absolutely. The bond market has much more easily been able to look through that noise. But I think, when it comes to the big events, if there is a change in Prime Minister, or if there is a second referendum, or if there's a general election, the gilt market will certainly pay attention to that. But if you look at how gilt yields have moved compared with bund yields, with treasuries, they've practically moved in line. So therefore, I think it's premature to think that gilt yields should necessarily rise if we see some political clarity. It all depends on the global bond outlook, and which is why we're very comfortable still to forecast 10-year gilt yields to end the year at 1.4%.